Hello, and welcome to a new episode with your host, Vinney Smile Chopra. I'm so excited to have you here as we dive deep into the world of real estate investing, syndications, abundance mindset, and building generational wealth. We are excited to be in the top 1.5% of the real estate podcasts. Got number 11 actually out of top 50 real estate syndication podcasts. Thanks to you. Each episode, we bring powerful insights, expert guests, and actionable strategies to help you take your investing game to the next level. Whether you are a seasoned investor or just getting started, if you love what you hear, please take a moment to subscribe, leave a 5-star review, and follow me on social media so that we can never miss an episode. Your support helps us continue sharing valuable content with more people like you. Now let's jump into today's episode. Thank you.
So it's Thursday. Welcome back to Abundance Thursdays. Myself, Gualter and the great Vinney Smile Chopra. Vinney, you're in the backyard today. It looks like the weather.
Yes. Thank you. Yeah. I'm just enjoying this whole ambience. Sun is not out yet today, but I thought, why not? I do standing walking. Then I go on elliptical after the show. Go upstairs and do the elliptical. That'll be nice.
So why is this show important to everybody today? A lot of investors are noticing a shift in the market, that there are opportunities, that cities seem to be changing. Cities that were really hot are no longer really hot. So let's say they're not. And cities that are seemingly, everybody was ignoring them, now we're starting to come up. But also asset classes are coming back into, they're becoming cool again. The lenders are starting to open up a little bit, but they're still requiring big down payments. So why is all this important? Wealth Principle 43 is understanding the power of demographics. Now, as people who own businesses, we have to understand what our clients do. We have to understand what our investors are doing. We have to understand what our staff are looking to do. Of the three, I would argue that clients are most important. So me and Vinny are going to talk about today how you choose an emerging market. And a lot of it is dependent upon where people will actually be. Vinny, you've been buying lots of real estate over the years. You sold a lot of real estate, over the last few years. You acquired it over 2 decades, but then you started selling quite a bit over the last 4 or 5 years. Why has the market shifted so much in the last 4 and 5 years? Why has there been such a big change?
It's been because of the age also. Age is the number one factor I see when people are like baby boomers, as we have been saying, 11,200 turning 65. They really move many times. They downturn. They are selling their homes and moving into retirement communities or near to their family, their children, grandchildren, all that. So migration happens. Jobs is another thing. As I live near San Francisco, Silicon Valley kind of just melted in the after COVID, and people just moved to Austin, Texas, and Atlanta and Orlando and all the other places because the tech jobs moved out, quite a bit of them from here. Apple is still strong over here. They're even building bigger campus and all that. But key thing is age is one factor. The second one is jobs. And then also the population of our Gen Z and Gen X and all of them and millennials, their attitudes are different. They are different, needs are different. And they like more portability. We say that millennials love portability. They don't like to buy homes and things like that. So they are more renting also. So that gives them availability to go. They're working from a laptop. A laptop can be opened up anywhere.
You're saying portability, not affordability. So in the past, affordability was something we would look at. Now we're talking about portability.
Yeah.
And so they're not buying, they're renting. They're looking at lease options. They're looking at things that allow them more flexibility.
Yeah.
Why is this relevant? Why is this young generation so relevant in the moves that are happening with, we know the biggest move right now with money is the silver tsunami. Why is that younger generation going to play an impact on what happens to the silver tsunami?
See, I think they're whole characteristic of the younger generation is minimal. Minimal is one word. Secondly, they just love not to take care of the backyard, not to get involved in paying property taxes and insurance, because if they're renting it, they don't have to worry about it. They just pay that one payment for the rent and let the landlord take care of rest of the things. So also portability is easy for them. They can hop around and go to different places, not be stuck with their home in one location. That's another one. Because people do change careers very fast. As I don't know what the number is now, but every year and a half, 2 years, all those things happen. So I think the younger generation is more tuned into more moving around than when we did it. We've been in the Bay Area 45 years, different homes, but 45 years.
So Vinny, there's a shift, right? This is a demographic
Yeah,
that's growing. In fact, you sent me I think I'm going to show this meme or
sure.
this graphic that you sent. This
Yes.
is the share of selected age groups in total of the US population from
Mhm.
1990 to 2020. And
Yes.
it looks like the change is that there's less of this older population. They're starting to drift. They're starting to disappear. And it seems like these younger kids, there's a lot more of them now. What is causing that shift, and why is that so relevant for us?
See, the thing is, under 25, that's the blue one. So if you look at it, it's 36.3% of the total population to 35 to 34 to 31. So actually, younger population is getting reduced number wise because they are going into next phase, millennial, and then X, generation X, we call it, and then we call baby boomers. Now, the purple one underneath, it's increasing, as you can see, 12.6%, 12.4, then 8, now 16.
Oh, you just
The
muted. There you
65
go. Yeah.
years and older population is going to be increasing. In the next 10, 20 years, it's going to become almost 25% of the whole population of USA. It's going to be seniors, right? In the 70 years and 80 years and so forth. That's why assisted living and memory care is going to be a huge. As the baby boomers are turning 65, 10,000, 11,200 every night until 2030, 2030, 31. All the baby boomers will be seniors by then.
So there's a point where this actually becomes even because we can see it. It's going from 36 to 35, 34, 31 on the split. And then you're seeing the baby boomers going from 12.6 to 12.4. It stays about the same. It goes 12.8, almost the same, but then
Yes.
it jumps up to the 16,
Yep.
which we expect around 2030. If
Yeah.
this continues to trend, there's actually going to crossover. And there'll be a point
Mhm.
where there's actually less younger people in that age range, and
Yeah.
there's more people who've crossed over that 65-year-old threshold, which means a different lifestyle. It means a completely
Oh,
different lifestyle.
mm.
Population is just aging. That's essentially what this chart says, is that we have an aging
Yes.
population and they're
Yes.
making different decisions. So those young baby boomers, that not baby boomers, the young under 20 years old is actually a shrinking population. So we've actually got a
Thinking
shift to what this older population is actually looking to do.
older puppet. So true. And that's how it is all about. The money flows. Where the money flows, the buying power flows in any given demographical age group. That's where the services and the products will shift also. Actually, we'll be seeing a lot more trillions of dollars of products for seniors in the next 10 years in housing and equipment and hospitalization and you name it, all kind of things, because that's where the buying power will be shifting with the millennials down to baby boomers. Now baby boomers are turning 65 and then 70 and 80 and all that. That's where this whole transformation is happening of wealth is moving. Yeah.
Now it's important to us because where money goes, we should be going. We want to get
Yep.
ahead of the
Yeah.
money where it's going to be. We also
Yeah.
see in these demographic shifts and changes that there's a population shift from northern states to southern states. People are getting out of
Hmm.
the
Hmm.
cold. They're going into
Yeah.
more retirement states.
Yeah.
Arizona, Texas, Florida's a big one.
Florida.
We've seen the real estate prices explode in all three of these markets. These retirement markets, we've seen the real estate prices explode. Now these markets are the same ones that we see kicking back. They're pushing back on pricing a little bit. Their rents are coming down a little bit. How is that impacting real estate investors right now?
That's a good point. Very good point. I just saw a study. Even Austin has been pretty depressed, actually, in the last couple of years, and so forth. Regression of rents, we call it. People giving the new products coming out. I think 30,000 or 50,000 came and got absorbed, and so forth. But the rents were lower and lower. And people were able to give free rents and concession rents for a month or 2 months, all that. But now I'm seeing a little bit shift coming back. So I think as the new plants are coming, from what I hear, Tesla is making a big one. Other people around there, I don't know exactly. Yeah, I think maybe, yeah, Tesla and some other ones. Anyway, but the thing is that shift is coming where the absorption has taken place of the available units and the rents will start to rise and the
So if
occupancy
somebody
will, yeah.
if somebody wants to test the market, because it sounds like there's a lot of different ways to test the market. There's a lot of different markets to understand. Austin, we just talked about. I was just thinking Miami while you were saying Austin. These are
Yeah.
markets that went up, came down, and now they seem to
Yep.
be in a recovery phase. If somebody wanted to do this research, what are the places that you're getting your data from?
The best data is by numbers. I think it's called numbers dot. We could put it in the in the comments below. City-data.com is a great place right there. Of course, U-Hauls, like we were discussing, where the migration trends are happening. Those reports are amazing. CBRE reports are amazing. Marcus and Millichap reports are amazing. And best cities, I think there are several different ones. I have 22 different websites, by the way. I don't have them right in front of me, but if anybody would like that, just DM Brother Walter or myself, and we'll get that to you. And these are amazing websites, all free, most of them are. And they can give you so many trends, so many things, statistics, and lots of them are there. Yeah.
And this is something that we actually talk about in your mastermind often, talking about the emerging markets, like how to find them, the
Yeah.
21 websites you use. All of these things they come up often because investors need to know that they're in the right market. Location. Obviously, the asset class is important. You got to pick that first, then you pick a location based on that asset class. But when people
Yes.
are looking to do this research, you actually do a wonderful presentation on it where here's how you find emerging markets. Here's what we do once we negotiate, and here's how we take it all the way to the next level. For, let's say, the person who doesn't know how to find an emerging market, what are some
Mhm.
of the things that you look for?
It all depends. If it's in your backyard or 2 hours away from where you live, you look for a community of 50,000 plus. I used to say 100,000 plus, but a lot of communities outside tertiary markets, we call them, they're having some great potential, great opportunities because businesses are growing and so forth. Jobs is what I have really followed. That's the key. That's the key. And within the metro area or smaller area, wherever you are, you should look for where the Best Buy might be coming, where Starbucks or McDonald's is coming, or Walmart is coming, or Costco is coming, because all those big box businesses, they put millions of dollars in research and they look for the trends where the jobs will be coming, households will be coming, and that's where you want to be, in apartments, in storage units, and all over the place. Because when the demand increases, that's where you will have better occupancy of apartments, better occupancy of rents, not only occupancy, but also increase in rents. The buying power will be increasing because more jobs are. So emerging markets usually are governed by the job creations. In senior living, it's opposite, totally opposite. So I have to go far away from the jobs, going to serene neighborhoods and lakes and all the very beautiful green pastures, let's say, to find communities where seniors would like to retire. They have already worked their life and they have built their net worth and everything. Now they want to do the best with the money they have and go into assisted living, memory care, or retirement communities on the golf courses and things like that. So that's the two spectrums. One is job driven location, and then the other one is away from jobs. And of course, for hotels,
I
I
was
really
just thinking, what do we do for the hotels? It's got to be different, right?
hotels, I love airport locations. Airport where travelers are coming, business travels is increasing. Also where the jobs are, where the Fortune 500 companies or 1,000 companies headquarters are. So tourism is very big. Of course, hotels in tourist spots, I would say airports and where the jobs are. So, like the one in Legacy West, where we are doing in Plano, Texas, it's going to be amazing opportunity because, and we're thinking about two other hotels to purchase nearby there because the market is so hot right now in the north of Dallas. So that's where three locations I like. I used to like the downtown locations or near to universities and all that. But I think there is a bigger fish to fry if you get good locations where the air travel is higher and near to the airports and also tourist attractions. And I would say the jobs communities where the headquarters are will be my second one there. Yeah.
Oh, that's solid. It's true. I remember I've worked for a number of Fortune 500 companies, and
Mhm.
the Marriott that was in the what is it called? In the area where all the big Fortune 500 companies are.
Yes.
It's like a
Like a
park or business park or
park or
whatever.
business. Yep. Yep.
Yeah,
Yep.
in those areas, those hotels were always full. And we always
Yes.
had executives flying in. We always had the VPs or the teams were flying in for training. There's always somebody flying into those main headquarters. I was in a place in Framingham, Massachusetts, where the Staples, the Computer Associates, like all of these major headquarters are all in this one little strip, and the hotels there were always busy. There's always those companies in.
So true.
For entrepreneurs right now who are there's some other things that you have that you sent me. Yes, we talked about age. We talked about jobs. There are some other things that matter. Income. So how is income related? The cities or towns or even zip codes or blocks where income is actually a major decider of whether a person will buy there or not, or how well that asset class is going to do.
Hi friends, this is Vinny Chopra from here in Danville, California. And you might be saying, hey Vinny, what are these over here? You know, I wrote this book a few years back. Apartment syndication made easy. It became top seller. I came from India with $7 in my pocket. It says 500 million. It's going to be 1 billion very soon, very soon. I'm right at about 850, 900 million. And then I'm ready for the next billion. Actually, you will see that happening. 2 billion in this book also. The other book I wrote, which has been a very big positivity, has been my life. Always, I've been married 43 years with 2 children, and the beauty is to be positive, the mindset that can take you to all the places in the world. And that's the book that also became big seller. My third book, Senior Assisted Living, is coming. So do yourself a favor, go ahead and click the link below to get free copies, audio copies of these books, even printed copies of these books. Printed means digital if you can't afford it, but I would highly recommend for you to get these or go to Amazon.com. Just go to Amazon. I got it in soft cover, in hardcover, in Kindle, in audio, also the Spanish version of this book also. So let's crush it, guys. I know you can be successful. I know you can do the kind of things that you want to do in life and have the streams of income and know how to really, educate yourself so that you could become a strong force in this world in real estate. I know you can. So take that step. Don't just be on the sideline. Take charge of your life. Take charge of your education.
Exactly. It's like how many people will be coming into your apartment? If we are talking about apartments, how many will come there transiently and then move into their own home? So you need to be doing some studies as to how much product is out there, how many more building permits have been issued already, and how many more units or apartment numbers we call it, or even in the hotels too. I'm very particular to see what is coming in that location, because more hotels, more rooms, more renovations will take away the business from your hotel. So that's why we want to look into PIP money, which is the property improvement plan, which in hotels we call it CapEx. And now with 100% bonus depreciation, it's the best of the best. And then 179 in the tax code, that's another one where the personal property can be all written off. So lots of great tax advantages come in hospitality, much more than even in apartments.
Apartments, residential assisted living.
Yeah.
Something I meant to ask you, casinos. Somebody said something to me a while back that said, look, you've got multifamily, you've got hotels, and then you've got casinos. What do you know about those types of demographics?
I just would say that Las Vegas is seeing some downward trend with the tourism and also people coming from abroad and things like that. So we have to be very careful for the casinos or back over there in Biloxi, I think, or somewhere down.
Biloxi, Alabama. Yep.
Yeah, right, where is also very much casinos and all. So one has to take into account the trends, and reports are there. See, that's the thing. Please take time to do some very good deep search in ChatGPT, Perplexity, or Grok, because what we used to do with Google, not anymore, because you used to look at so many different sites to put it all together. But now, by giving the best prompts, writing it out, just like you're asking your assistant, it will give you everything you need on your desktop. That's the beauty of it. And I use that ChatGPT 5.0 every day, so many times a day. It's mind boggling.
You're the one that turned me on to Perplexity. And about a year ago, we're actually coming up, we're getting closer to the summit. We're only 60 something days away.
Yeah.
And it was right before the summit. I remember I was talking to you and I went into Perplexity and I started researching one of the top 9, 10 markets that I could invest in as a multifamily investor, looking specifically for multis. And it popped out a lot of research. I went through it, but Perplexity took what probably would have taken me a month. I was able to do it in a couple of hours and made the decisions. And then I validated them later by calling brokers, property managers, and like validating like the data that gave me. But it was so much faster. Vinny, why do you think people are not successful now? When this information is so available, what do you think is stopping people who are sitting on millions of dollars from going and deploying in this market right now?
That's a very good question. I would say many times education is big thing. I remember when I got educated 20, 25 years back into multifamily, into syndication and fund, how to raise money and all that. Everything you learn, new skill, it takes time. It takes time and effort. And then you practice it with a coach or mentor, follow along with them to learn from their mistakes. That's what I say, because you don't want to make mistakes, because that can cost you thousands of dollars and you will be just walking away with losing your shirt and everything. So the big thing is education. Secondly, over analyzing also doesn't help. In other words, that you are always saying, okay, and you are just second guessing yourself after talking to investors, after talking to brokers, and you found a great deal in multifamily or hotel or whatever it is, or senior living, which is a lot of depressed senior livings are out there. The key thing is to take that, look into the numbers. Underwriting, that's where it all boils down to. I made decisions to buy $60 million deal, $67 million deal from the underwriting perspective, making sure the numbers are correct, making sure you're not buying away, giving it to somebody else down the line to put the numbers. Because if you put wrong numbers in the underwriting, it can kill you. It can kill you. So that's why I've always looked at myself, making sure double guarantee all the actual numbers are in the underwriting about revenues and percentages of occupancy and concessions and RUB systems and all those stuff, and right taxes and insurance costs and all those things. Then you look at what's the cap rate, what's the COC, cash on cash return before taxes, what's the DSCR. If all those things look good, then I think we should just take that step to buy it. Put the LOI, of course, at a lower rate than what you want to be, and then you go a little bit higher, negotiate, and that's the name of the game. So people who are learning the skills, or if you don't have time to learn, go ahead and partner with somebody who could do the, if you don't like numbers, but you have the money, partner with somebody who will be able to partner with as a joint partner, GP, we call it general partners, and then take that step. Because I started from 14 units many years back. Remember, $180,000, sold it for 380. I should have kept it because that's worth a 1 point whatever million now, and then 109 units and 500, 600, thousands of units. The key thing is to start. And then other thing I find is people are looking for greener pastures. When will there be the rock bottom? They want to buy the rock bottom, but the rock bottom never shows up. It's like you have gone through it. You have to look at it going in and then going out of it. So I think it's best to take some really good, intelligent steps, just like you are doing, your brother. Look at that. They're in Jackson, in Cleveland, and you're buying great deals, amazing deals. Yeah.
It is true. It's an amazing time right now. You just said something that is interesting to me because I'm buying, I'm acquiring, I'm doing all the underwriting, the
Mhm,
due diligence, the same thing that you
mhm.
do. Here's what I think a lot of people are missing, right? Somebody who has, because I know there's people who are listening who are, because I'm talking to them all the time, right? People who have just done an exit on a $2.5 million business, right? Built a business, exited, sold, made 2.5
Mhm.
million. I have another person who earns about $800,000 a year and they're just earning, but they're paying a significant amount of tax every year. Another
Yeah.
gentleman I spoke with this morning, literally this morning, spoke with him. He's earning somewhere between $400,000 and $500,000 a year, just burning through taxes, and has
Mm.
absolutely no tax structure. And that person, those types of people are, they want to learn this. They even know that education is required. Some of them, like, I sit down, I do that return on equity equation where I look at their assets. I say, okay, you got this earning, it's paid off property, earning nothing, or very low return on equity. They're still having a hard time with the transition from either going from single families, because you did the single families for
Yeah.
decades,
Yeah.
or they're having a hard time jumping in because they understood their accounting business, they understood their insurance business, they understood their tech business,
Yeah.
and they're just struggling. Vinny, that's a demographic. That's a whole demographic, a whole behavioral pattern
Mhm.
that people are suffering from, and they're missing out on tax advantage. You started this call by talking about depreciation, right? You were talking about if
Yeah.
you buy more, you now you get the depreciation schedule. You were talking about, you often talk about the cost segregation. You mentioned it earlier, right? The ability to
Yeah.
cost segregate, to lose money. These high income earners are not exposed to real estate, but they absolutely need those losses, need that real estate
Yeah.
loss. Why is it that people are starting to come awake to it now? Is it just that people are making more money now? Is that just the case, or is that people are
Mm.
transferring assets now? Is it because there's just more people selling businesses as people have made it more popular? Because I see a lot more of it now happening in my sphere and people I see online. Mostly in the conversations I'm having, I'm wondering just why is it now that more people seem to be earning more than ever, and that they're now starting to say the tax game is an issue? It's a
Uh,
weird question. It's like a weird thing that
yeah,
it
that's
seems like
it.
people are aware of it now. Is it because
I
Trump? Is it like, what's the story here?
No, that's so true. What you're saying is such a good thing. It's a transfer of wealth, we call it. It's the legacy building. As the baby boomers are turning 65, they are going semi-retirement or they're selling their businesses. They are getting into very small amount of time in a week if they can have passive incomes or active incomes through franchising, all those stuff. A lot of time, what I've found is that business owners, parents, grandparents, their children have different goals. They do not want to be working as hard as their grandparents worked or their parents worked. They said, you know what, I will be happy if I can make this amount of money in my position and so forth. The entrepreneurship level is probably not as much. Maybe I'm wrong, but seems like a lot of businesses are winding down and they are cashing out. Now, it could be a all gain then big property, the capital gains, we call it, and other things. But there are ways to really save on taxes by having passive losses or active losses, like in hotels. For example, it's a daily business. You could put together some joint ventures. I'm not CPA or attorney.
Hold
I'm
on.
just
You have a
giving.
hotel you're talking about right now because you're
Mhm.
about to go do what's called a leveraged loss. So you're going to borrow money to go and actually
Yeah,
do investments on the property. So
yeah,
you'll actually be able to claim a bigger loss this year. So
yes,
let's talk about
yes.
that deal. That's one that's
Oh my
active happening
gosh.
right now, right?
Yeah, like we are putting $4 million in renovations with the new tax law that just got passed. 100% of 4 million will be deducted. The profit loss statement, P&L, everything is profit. Everything is profit, but $4 million negative makes the whole LLC go into negative. Our distributions will be given out to our investors, LPs, limited partners, and GPs, us
So they
also.
still get cash flow. You and the
They
partner still
still
get
get the
cash flow,
cash flow.
but you also get a loss.
Big loss, 65% loss. If somebody puts 500,000, 65% is like 300 some thousand. They will be able to get passive loss. Now, if they do it at the asset level, joint partnership with us, then they get the whole thing off as active loss, W2 loss. It's mind
I
blowing.
just heard this from a CPA. They said that if I'm doing recourse loans, so if I'm
Yes.
borrowing with recourse money, that's
Mhm.
money that I can use as an expense. I can use that literally as an expense in my
Mm.
taxes that year because the loan is recourse against you, the borrower, and so it's counted as a loss. It's you injecting capital into the property, even though it wasn't
Yes.
your capital. They're counting it as your capital. It's a very interesting tax code, and
That's interesting. I know we are not CPAs or attorneys. We just
not
share.
tax
Yeah,
advisors. Yeah, we don't
it's
do any
for
of that. Find one.
entertainment and educational purposes only. Just entertainment that we do this show every Thursday morning, 9 a.m. Abundance mindset, and mostly in real estate because that's what we are in. You and I are both into that knee deep, and we are just sharing the ideas and our hacks and different things. And if anybody would like us to discuss some topics, please reach out to us. Right, brother? Yeah.
Drop it in the chat. Drop some comments in below because me and Vinny both research and respond to these. Before we jump off, Vinny, because this is Abundance Thursdays, we try to do this within 30 minutes. There's
Mhm.
a couple of hacks you suggested for finding great neighborhoods. If you could say
Yes.
that there's once you know your strategy and what you want to do, whether it's hotels or residential assisted living or multifamily, or you're still doing flips or single families, what is what is the place that you go? Is it Perplexity? What is the number one place you'd start with your research? Oh, and we just
One
yeah, go ahead.
ice cream, ice cream. When we talk about frozen, I think about ice cream. Love ice cream. I was just thinking we were just freezing frozen, there. Can you hear me okay? Yeah.
I hear you okay
Yeah,
now.
yeah,
You're
yeah,
back.
yeah. Yeah.
Welcome
Okay,
back.
okay. I righty. Thank you. Yeah, essentially, I would say that there with the AI, artificial intelligence softwares like ChatGPT, Perplexity, or Grok. Grok is another very good one, which is tied to the Twitter. But the key thing is to just ask a question. Just say, I live in this zip code. I'd like to give a hack right now. I live in this zip code. I'm looking for buying an apartment complex, which is 10 units or 20 units, or I'm trying to buy a hotel or a senior living. Just say that. Write it out. And could you dive just say that also, write it out. Could you do a deep dive and give me what's near to this zip code? Are there any listings right there on the internet? And what's the price range? And also give me some graphs and trends of multifamily growth and job growth. See, I'm just saying that just as I'm talking to you, all you have to do is what you want from the AI. It's your personal assistant. That's what it is. Just consider you're giving command to somebody office and you just sit back and relax and look at it. It's going to go through the whole world of different websites, read them fast, and then assimilate everything for you in your zip code or within 50 miles from that zip code.
I remember I used to send this to a virtual assistant to do this exact task, and it used to
Yeah,
be a
yeah.
week later. I would get my PowerPoint, I get
Yes.
my data and graphs, and now this happens in 5 minutes. It is absolutely
Lit-
amazing. So,
It's
ladies and
amazing.
gentlemen, this is Abundance Thursdays. We do this every 9 a.m. PST, that's West Coast, and 12 p.m. EST on the East Coast. If you are getting something out of this, please share, subscribe, share below. It means a lot to us, but it also means a lot to other people to see what information is happening in the marketplace. Wealth Principle 43, we're going to dive deeper into it on ibuildmillionaires.com tomorrow, not tomorrow, Saturday. And if you want to
Excited.
learn more about Vinney Chopra investing with his deals, go to vinnychopra.com. He also has a training he does
Yeah.
every other week, and that training can be found at vinnychopra.com/events, or you can go to
Yeah.
Eventbrite and type in Vinney Chopra and find out what is going on in the multifamily space, in the hotel space, and in the residential assisted living, senior assisted living space. Vinny, if you were to jump off, what piece of advice would you give to somebody right now who's on the fence about investing? They're not quite sure whether they should or would like to. What's the one piece of advice you give them to figure it out?
I would say do full due diligence. There are look for whichever class of asset you like. Go ahead and do some research in that particular class. I know we are freezing, looks like a little bit, but
due diligence. I think I know what you said. Do research in that class. Due diligence.
Yes.
Do some digging.
Because
now you sound way better as you get closer to the house.
Oh, thank you. I'm just coming closer to the house there. You're right. See, the thing is, you got to really spend some time in vetting the sponsor, general partners, how many people are there, what have they done, their track record, and then double, triple research, then you invest with them. As an LP, limited partner, there are great opportunities out there, but the thing is, you got to make more money than 4% or 3% in the bank account. Take that distributions, monthly or quarterly distributions. Look for cash flow and also the upside. So the big thing is you want to place your money with velocity. I always say that. You don't want to and it's not that hard. Many times we think it's very hard, but it's not, because you can really learn from the proposals and things like that. Like in my case, I'm raising so much good money. People are just loving it with the hotel because it's going to double their money in 4 to 5 years, almost there. And so forth. Again, it's a 506C. I want to say that it's for accredited investors. Yeah.
And for everybody who's listening right now, if you don't know what a 506C means, it means accredited investors only, which means you have to earn over $200,000 a year and have a net worth of over $1 million a year. $1 million that does not include your primary residence.
Yes.
So an accredited investor is somebody who the government says this person's sophisticated enough to make decisions on their own, and they can get access to certain deals. If you're not accredited, set it as a goal. We are building millionaires who are committed to building more millionaires. You go to alchemistnation.com for free resources. The summit is coming up. Cheers to your success when you have a choice. Always work with the best. We'll see you next week. Later,
yes.
Dear friends, this is Vinney Smile Chopra. I am so glad you're listening to the episode. Thanks so much. Really appreciate that. Please share it with others who can really benefit also. Can I ask you a favor? Just a small favor. Less than a minute, if you could give 5-star reviews on iTunes or Stitcher, that'll go a long way. We are one of the top podcasts in real estate now in the nation, but it will really help a lot if you gave 5-star reviews, and we'll bring a lot more great content for you. Thank you so much. Appreciate that, and see you in the next episode. God bless you. Bye-bye. Wow, what an incredible conversation today. I hope you got tons of value from this episode. If you did, don't forget to subscribe, leave a 5-star review, and follow me on social media to stay updated on all the things real estate, investing, abundance mindset, and wealth creation. If you're an accredited investor looking for exclusive investment opportunities, be sure to join our elite Monil Investors Club at vinnychopra.com/invest, where we share details of our future projects. Quick disclaimer, we are not selling any securities, and this podcast is strictly for educational and information purposes only. The opinions shared by our guests are their own and should not be considered financial or investment advice. Always do your own due diligence and consult with a financial professional before making any investment decisions. Thank you again for tuning in. Until next time, keep smiling, keep investing, and keep making a massive impact. God bless you.